Cryptocurrency must be one of the most talked about areas of the decade, and if you still find it confusing, we are here to clear it up. All your questions and more will be answered. Here's everything you need to know about cryptocurrency to prepare for the future. Cryptocurrency is like regular currency, but completely digital to put in its most basic form. Cryptocurrency is decentralized digital money that's based on blockchain technology. You may be familiar with the most popular versions, Bitcoin and Ethereum, but there are more than 5,000 different cryptocurrencies in circulation. Cryptocurrency comes in many forms, intentions, and uses. The simplest way to look at cryptocurrency is a form of stored value that is not beholden to governments or central agencies like banks, states, or companies. All records of its creation and when it's sent or received are stored in a digital ledger that anyone can access, keeping it honest. It can't easily be stolen or seized and can be used anywhere in the world. Cryptocurrencies make it possible to lend, sell, buy, or borrow without an identity, credit score, or even a bank. Diving a bit deeper, a cryptocurrency or crypto is a collection of binary data, ones and zeros, which is designed to work as a medium of exchange. This sounds complicated, but even dollar bills have serial numbers on them to verify them and keep a record. It's the same with cryptocurrency. They can also be divided into smaller pieces, similar to how the dollar can be divided into pennies. Individual coin ownership records are stored in a ledger, which is a computerized database using strong cryptography to secure transaction records, to control the creation of coins and verify the transfer of coins between people. Cryptocurrency does not exist in physical form like paper money and is typically not issued by a central authority. However, it can be, and many governments are working to create a crypto coin version of its respective fiat currency. Cryptocurrency typically uses decentralized control as opposed to a central bank digital currency. When a cryptocurrency is minted or created prior to issuance or issued by a single issuer, it is considered centralized. When created with decentralized control, each cryptocurrency works through what is called distributed ledger technology, which is typically a blockchain that serves as a public financial transaction database. The term cryptocurrency comes from the cryptographic process that developers have put in place to guard against fraud. These innovations address the problem faced by previous efforts to create purely digital currency, how to prevent people from making copies of their holdings and attempting to spend them twice. Individual units of cryptocurrencies can be referred to as coins or tokens, depending on how they are used. Some are intended to be units of exchange for goods and services, others are stores of value, and some are mostly designed to help run computer networks that carry out more complex financial transactions. Cryptocurrencies are underpinned by cryptographic systems. They enable secure online payments without the use of third-party intermediaries. Crypto refers to the various encryption algorithms and cryptographic techniques that safeguard these entries, such as the elliptical curve encryption, public-private key pairs, and hashing functions. Cryptocurrencies can be mined or purchased from cryptocurrency exchanges. Not all e-commerce sites allow purchases using cryptocurrencies. In fact, cryptocurrencies, even popular ones like Bitcoin, are hardly used for retail transactions. However, the skyrocketing value of cryptocurrencies has made them popular as trading instruments. There are different types of cryptocurrency. Bitcoin is the most popular and valuable cryptocurrency. An anonymous person called Satoshi Nakamoto invented it and introduced it to the world via a white paper in 2008. There are thousands of cryptocurrencies present in the market today. Each cryptocurrency claims to have a different function and specification. For example, Ethereum's Ether markets itself as gas for the underlying smart contract platform. Ripple's XRP is used by banks to facilitate transfers between different geographies. Bitcoin, which was made available to the public in 2009, remains the most widely traded and covered cryptocurrency. As of November 2021, there were over 18.8 million bitcoins in circulation, with a total market cap of around $1.2 trillion. Only 21 million bitcoins will ever exist. In the wake of Bitcoin's success, many other cryptocurrencies known as altcoins have been launched. Some of these are clones or forks of Bitcoin, while others are new currencies that were built from scratch. They include Solana, Litecoin, Ethereum, Cardano, and EOS. By November 2021, the aggregated value of all the cryptocurrencies in existence has reached over $2.1 trillion. Bitcoin represented approximately 41% of that total value. Cryptocurrencies were introduced with the intent to revolutionize financial infrastructure. As with every revolution, however, there are trade-offs involved. Some advantages of cryptocurrency are, firstly, easy transactions. Crypto transactions can be made easily at low cost and in a manner more private than most other transactions. Using a simple smartphone app, hardware wallet, or exchange wallet, anyone can send and receive a variety of cryptos. Secondly, they have incredible security. Because they are based on cryptography and blockchain security, decentralized cryptocurrencies tend to make for secure forms of payment. This might be one of the most certain benefits of cryptocurrency. Crypto security is determined in large part by the hash rate. The higher the hash rate, the more computing power it would take to compromise the network. Bitcoin is the most secure cryptocurrency, having the highest hash rate of any network so far. Thirdly, the industry is experiencing exponential growth. The cryptocurrency industry has been one of the fastest growing markets that most of us have seen in our lifetimes. Fourth, portfolio diversification. Cryptocurrency has become known as a non-correlated asset class. Crypto markets largely function independently of any other markets, and their price actions tend to be determined by factors other than those affecting stocks, bonds, and commodities. Any asset that has risen by millions of percentage points over just 12 years, as a number of crypto coins have, clearly is not correlated to anything else. But it's worth noting that during the last few years, cryptos have become to sometimes trade in tandem with stocks for short periods of time. Fifth, inflation hedge. Mineable cryptocurrencies with a limited supply cap like Bitcoin, Litecoin, and Monero, to name a few, are thought to be good hedges against inflation, because monetary inflation can occur when central banks or governments print more money, increasing the supply. Things that are more scarce tend to appreciate in value, with more and more new dollars chasing fewer and fewer coins. The price of these fixed supply coins as a measure in dollars has a higher chance of going up. Additionally, the Bitcoin protocol, for example, is also designed to keep these coins scarce, regardless of what happens with the monetary policy. Sixth, cross-border payments. Cryptocurrencies have no regard for national borders. An individual in one country can send coins to someone in a different country without any added difficulty. With traditional financial systems, getting funds across international borders can take a long time and come with a hefty fee. In some cases, doing so might not even be possible due to regulations, sanctions, or tensions between specific countries. They offer a more inclusive financial system. Some of the benefits of cryptocurrency extend to people who don't have access to the traditional financial system. Due to its decentralized and permissionless nature, one of the benefits of cryptocurrency is that anyone can participate. People don't have to have permission from any financial authority or government to use the crypto ecosystem. They also don't necessarily need to have a bank account. There are billions of people today who are unbanked, meaning that they have no access to financial systems, including bank accounts. With crypto, all these people need is a smartphone, and they can easily essentially become their own bank. Eighth is transactional freedom. One of the benefits of crypto is that it can be used to exchange value between two parties. This can be done independently of a third party, making the transaction freer and censorship resistant. Banks or other payment processors can choose to cut services off to anyone for any reason. This can make things difficult for some journalists, political dissidents, or other individuals working in nations with oppressive government regimes. Because there is no central authority governing Bitcoin or most other cryptocurrencies, it's very difficult to stop anyone from using them. Ninth, the market is open 24/7. Crypto markets trade 24 hours a day, 7 days a week without exception. Some of the only things that could interrupt a person's ability to trade cryptocurrency would be a power outage, internet outage, or centralized exchange outage. And of course, with advantages come disadvantages. Some disadvantages could be that although they claim to be an anonymous form of transaction, cryptocurrencies are actually pseudonyms. They leave a digital trail that agencies such as the FBI can decipher. This opens up possibilities of governments or federal authorities tracking the financial transactions of ordinary citizens. Cryptocurrencies have become a popular tool with criminals for nefarious activities, such as laundering money and illicit purchases. Cybersecurity issues are a concern for cryptocurrencies as they have become a favorite of hackers who use them for ransomware activities. Next is price volatility and lack of inherent value. Price volatility tied to a lack of inherent value is a major problem. It is an important concern, but one which can be overcome by linking the cryptocurrency value directly to tangible and intangible assets, as we have seen some new players do with diamonds or energy derivatives. Increased adoption should also increase consumer confidence and decrease this volatility. Lastly, regulations. Even if the technology is perfected to get rid of all these problems listed above, until the technology is adopted by federal governments and regulated, there will be increased risk in investing in this technology. It is possible to lose your virtual wallet or delete your currency. There have also been thefts from websites that let you store your cryptocurrency remotely. The value of cryptocurrencies such as Bitcoin can change significantly, so some people don't feel it is safe to turn real money into Bitcoins. The cryptocurrency market is not regulated by the Financial Conduct Authority, or FCA, so there is no rules in place to protect your business. Cryptocurrencies can be vulnerable to scams. Scammers often use platforms like Facebook, Instagram, and Twitter to trick people into these investments. We believe that the advantages and uses outweigh that of the concerns, and that crypto will be a major part of life in the future, especially looking forward at the way the metaverse and businesses are evolving. What are your thoughts about cryptocurrency? Let us know in the comments below. If you enjoyed the video, please be sure to hit that like and subscribe button so not to miss out on more.